Hey, what's up YouTube? It's Flex and Joe and I'm back with another trade recap and review. Today reviewing a trade on the NASDAQ. I took the NQ futures near the low of the day, up 240 total points on the final contract, which is a $4,800 per contract win. And so we're going to go through that trade with you guys. You definitely want to stay tuned to the ending where I cover the key learnings from this trade. Okay guys, so whenever I'm day trading futures, I'm always looking at a minimum of 3 time frames. And here I have the 1, the 5, and the 10. I will also cycle through bigger time frames such as the 15, the 30er. Good job, Joe. I will cycle also through the 30, the hourly, the 4 hour, the daily, the weekly. I'll go through all of them, right? But in the morning and preceding this trade, this is the view that I would have seen, right? So I would have seen that overnight, we closed, we dipped down a little bit below that close, we held right through here. This was the low of day, which this big drop pushed us through. We had pushed up and we had broken over the all-time high. So you see, we break over what was the all-time high at that point in time, come back down, right? We test VWAP, and then we actually base back underneath it. And then London, during the London session and the European CPI news essentially comes out at 5 a.m. and this just sells off like really hard. And what I noticed specifically on the 5-minute candles was that you were having increasing volume with decreasing candle size, meaning that buyers were really starting to step in and absorb this price action, right? What I also want to point out, if we go to the 10-minute chart, is that we bounced off of the 10-minute 200 and we end up closing above. Also, in addition to that, if you look at where we had just made this low, right, and you go from the swing low up to the swing high here, we hit exactly on the 50% fib, which is the golden zone retracement. In addition to that, you see this white dashed line right here in the middle of the screen. That's the opening print from Thursday's session at 9:30, which is a very, very powerful price level. I mark that every day, and now I have a study that marks this automatically. So I always have it marked, I always keep it as a frame of reference, from the prior day and the current day. So we bounce from that level. I see that we're bouncing, and we bounce up a good 10 points here at the bottom of this 10-minute candle. Looking at the 5-minute chart, this is what I see, and then I see the next candle, we get this hammer at the bottom, right? Hammer at the bottom showing that seller's exhaustion, buyers are stepping in, still a lot of volume on that candle. And then also looking at the 1 minute, right, you saw that there was a lot of buying here, and then it eventually got overtaken, and you start seeing lower wicks forming, lower wick, and then it just starts to consolidate sideways a little bit, and that's where I entered right here. So this was a little bit more risk than I typically would have liked, where I was risking below here, but it was a bigger trade, and I was prepared to take a little bit more of a risk, knowing that this had such high potential, because I believed that overall we were setting up for a very bullish move, and that we had already broken over the all-time highs overnight, and with the potential of having really not that much news in the New York session, and some depending on what other stocks were doing, we could continue to push. I thought that we were going to push, so I thought this was like a news sell-off, fake out, trap the sellers, and then force a squeeze. So obviously that's exactly what happened. Then looking at this trade, I took one contract off here at 10, just to de-risk the trade a little bit. Things were working in my direction, and I wanted to just lock in some profit, reduce the risk a little bit. I took another contract off right here. Then I held through this pullback. In reality, I should have added here, I should have retaken it, and the reason I feel like I should have retaken it is if you marked a fib from this move, like on this pullback, you see they held the golden zone, and they bought it up out of there very strongly. Had I even gotten in up here, it would have still been a solid entry that was never retested. So that's definitely one of my key learnings for this trade. I also then took another contract off here as we approached the 5-minute 200 and the 10-minute 20 EMA, which is also your 1-minute 200. So there was a lot of EMA confluence here for algos to potentially sell off of, and so that's where I trimmed one contract there. And then my next sell was on this candle, very, very close to the top. I will show you guys that again. So entries here, here scale, here scale, up here scale, up here. This is the last one, right? So right before that doji, right here in between these two. So I scale one there. Now I'm down to one contract. I have my stop here, and I left my stop here. So, you know, as we move through VWAP, we're just chopping in through the open. We get a huge rip candle. At the beginning of the day at the open, one of the things that I said was, let's be prepared for it to pop up, potentially into the London orb low, which it did. It actually went to the middle of the orb, and then for it to come back down. You'll see, right, that when I talked about the opening candle print, it based right off of there, wicked right below the open, and the buyers just bought that right up again. There was no candles closing below VWAP. It was getting bought up within this 5-minute, 9 and 20 EMA. We got news at 10, which created this crazy wick, crazy pop and drop, and it continued to go. I scalped it long here on a different account. I also added in long here, and sold my best contract for 50 points on that trade. But I continued to hold this contract, and here's where I made a very key mistake. I started to, after seeing this and you know, just kind of counting the pullbacks and thinking about how many times we were going up and realizing that we were in all-time high territory, I thought that even though we were squeezing, there was a potential that this may, you know, start to come to an end. And we had already formed a lot of dojis here, and when we formed this doji, that is when I got spooked, and I just thought, hey, you know what? I can take a stop here at 18,280, and if I take that stop there at 18,280, you know, it's 240 points locked in. Is by far my best trade. You know, I have gotten 200 and 201 points before. Let me just lock it in and take it. In hindsight, there was no reason for me to take this trade off. The chart was still bullish, and even if I just had said like, okay, this is what the chart is giving me, there's no reason to stop. Look what I held through this. I held through this, right? I held through some bigger pullbacks lower when I was still confident we were going to push higher. And so what I should have done is said, I will take this trade off when the first candle closes, you know, into the 10-minute 9 EMA, which would put me, the first candle closing would put me right here, right? I figured, you know, if we get up here and we close into the 10-minute 9 EMA, there's a good chance at the end of this trade, this is a 300-point trade now. So it's an additional 60 points I potentially gave back after such a huge trend. You know, it's not to say that to be greedy about it and try to squeeze every trade for as much as possibly can, but it's about repeatable execution and looking at the 5-minute chart. Again, there was no reason for me to cut this trade here. I see that now. I know that now. I think that at the time, what I did was I was very, very focused on the 1 and the 5-minute chart, and I was failing to put enough stock into the higher time frames. So you can see this is the area where, you know, it pushed up and then I get stopped. So where I get stopped here, you know, we're still holding even the 1-minute 20 EMA, even though we wicked down through it. This is still a very, very bullish looking move. And if I held through this, like, why did I let this wick me out? So definitely a key learning there. But let me know what you guys think about this trade. I'm pretty stoked about it. It's my biggest trade to date, and it worked out exceptionally well. I got, you know, of course, a little bit of luck always goes into it. You never know how a trade's going to shake out, but I had a theory. I had a good idea of what they were doing when they brought price down and where we were trying to go for the day. And so I took it, I executed, I accepted the risk. That's all you can do in trading. And it took off, and I held it for, you know, what I thought was as long as I could at the time. In hindsight, I should have held it longer. This is why it is the key learning, the ultimate key learning from this. This is why it is important to make sure you review all of your trades, not just your winners. Sorry, not just your losers, but also your winners, because your winners can tell you a lot about your trading as well. So review all your trades, and let me know what you guys think. Please make sure to like and subscribe for more content, and I'll see you guys in the next one.